Oh, Pam.
Yeah.
Go ahead. I'll take yours next.
Ever since Representative Villarreal told the story about Steve Mostyn, I've been kind of stuck on that moment in the conversation, and I know this is not really supposed to be the focus of this particular panel, but I just have to say I think it's a very depressing state of affairs, right? When the only way we can move on a progressive issue that the vast majority of people feel is the morally right way to go is by having somebody that has just as much money as the other guys to pay off the legislators to vote because they're going to support them in the next campaign. I'm sorry, I'm just disturbed by that.
I think it's important to have that perspective, because those of us who spend a lot of time in the Capitol can become inured to that.
Yeah. So it's not so much paying off legislators.
I don't mean paying, you know what I mean. I mean supporting their campaign.
So legislators want to be reelected. Yeah. And to do that, we have to run for office. And if we're opposed, you have to raise money to get your message out, to characterize yourself. Advertising isn't free. TV, radio, print, all that costs money. Your opponent is going to raise funds to characterize themselves and you. And so it unfortunately, in this state where there are no limits on campaign contributions and free access to the airwaves does not exist, it costs to run for office. And so I work in a field that lets me attempt to reshape the world as I'd like it to be, but I have to deal with where we are today, and this is where we are today. And so I welcome Mostyn's presence in this debate because it strengthens our hand in order to pass progressive legislation. It is what it is.
It does seem like it's a money versus morality kind of thing, doesn't it?
But there's another way, I think, to look at that, and it's interesting that Ann is the one who asked that question, because I was gonna point at her earlier when the question was, can a bill pass next session? If we don't pass it, will they be so strong next session? And what I would say is, only if the public lets them be, right? I mean, only if the public doesn't give legislators the support they need to pass legislation. And Ann is the director of the program that tells us that we have low civic participation, we have hard time getting people involved in the policy debate, and that's part of the trick for legislators, is that this may be a very important issue to a lot of people, but if they don't vote, then the only thing that votes is the money. And you said, so campaign finance, then that's a problem too. We got a lot of problems, the healthcare, the campaign finance, the payday lending. It's like one of those games where you can only move one square at a time, but you want to go ahead and keep moving them, right? A little bit, a little bit, a little bit. Get it there.
Yeah. Okay. Sir?
It's kind of related. I just finished reading David K. Johnson's book about the IRS, which is actually 10 years ago, but he said the tax preparation agencies like H&R Block have basically the same thing. They get people and then they charge them all kinds of fees, which sounds exactly like payday loans. Is that still the case?
Yes.
Okay, that was quick. Anybody want to elaborate?
No.
You had said that your organization looks at sort of the fiscal impact of legislation. I'm trying to understand what it would cost, the taxpayers of Texas to pass legislation, and then also who would benefit or lose out if certain types of legislation were passed, putting limits on. You talked about limits.
Right, and so the fiscal implications for a bill like this are not directly to the state, so it's not like it costs. It potentially costs the state a little tiny bit of money to enforce regulations, right? But that's not the main implication. The implication is if you pass legislation, if what we're concerned about is that borrowers are paying too much, then the way you know it's a successful bill is if they pay less. right?
That's the
I mean,
physical
you can
analysis.
do all that other stuff, you
Financial.
can do a lot of other kinds of things that are good for borrowers, but if the central concern is they're paying too much, then when is if they pay less?
And what is, just briefly, what is the figure that's been calculated for the legislation?
The
Question.
figure that's calculated for the legislation is that the legislation that is in the Senate right now on hold would save borrowers $132 million a year conservatively, and that is 20% of the fees that they're paying right now. So it's not insignificant, the amount of savings that they would get.
Any other questions? Piper.
I'm curious about who's taking out these loans. I mean, you mentioned people coming in, you mentioned regulations in Spanish, you mentioned working class families, but what are the statistics on who's going in and getting these loans?
Good question.
Well, I can tell you who's getting them sitting across my desk. One thing is that it's not the poorest of the poor. It is the working poor. That all of them have to have some kind of stream of income coming in to qualify for the loan. So we're not talking about the homeless folks. We're talking about a step above that. That most of them are employed and lower income as far as that goes. I'm not sure about the statistics on ethnic breakdowns and those kinds of things, or even gender breakdowns. But for me, it's run the board. I mean, we've had large families, we've had single moms, we've had single individuals, we've had white, we've had Hispanic, we've had black. So I mean, there doesn't seem to be at least for me, a real pattern on that. But I'm a very small slice of the larger pie too. So
Let's.
And just the statistics, there are some statistical analyses that have been done from national surveys as well as local surveys, and on payday loan tends to be dominant women, majority women, lots of single mothers disproportionately represented in that population. The income range we're seeing is 20 to 40,000 a year seems to capture the vast majority of this market. Some interesting statistics that people are surprised to hear, which is about 20% are seniors, or people in the 50 and up, and we've heard a lot of stories of people on Social Security and fixed income getting caught, but that the big demographic is 20 to $40,000 a year in income, and tends to be women, and in that kind of middle, starting to middle working age range, when people tend to have families, like 20 to, also, the 20 to 40 age range, where people are working and will likely have other obligations. There are different statistics on payday lending. It tends to be largely Hispanic and African American, but not everybody. I mean, there's more statistically in those communities. In auto title lending, it's a little more male focused and a little more diversity across the different ethnicities.
I believe AARP also came out, did they not, with their constituency tend more toward the auto title loans. They speculated that was just the secured aspect of it, that they kind of related to that a little bit better. So they've gone more to the auto title than to the payday.
And of course, to get a payday loan, you have to have a paycheck, you got a job, these are working people by definition. Last question, Brad.
You talked a little bit about the risk that these companies are absorbing with these high fees and rates. Do we know anything about the profit margins in the industry?
Huge.
Do we know anything more specifically than that?
Well, like First Cash Pawn, I think just issued had their quarterly stock report. They're up 25% for the year. I think they had 15% profits, but the value of their stock is up 25% for the year. I think at the end of the year, Easy Core issued their stocks, and they had significant profits.
So they're managing the risk pretty healthily.
Thanks.
All right, thank you to our panelists very much for being here, and thank you.